Yes, people, a very happy with all of you. So, guys, we started with a brand new topic in the last class, which was accounting for depreciation. So, last class was a theory class where we tried to understand why depreciation. Second was what is the meaning of depreciation, and with that, we wound up the session. So, before we proceed to discuss the new concept for the day, let's have a quick recap of those two questions that we answered in the last class. The first question that I asked is why depreciation? Why depreciation? We saw an example where decades ago, when the businessmen, entrepreneurs were preparing accounts, very smartly they prepared the accounts for 8 months, 9 months, 10 months to see where they are standing, what is their profitability standing at. So in our example, we prepared the accounts from April to Jan for 10 months to see what the profit is turning out to be. And if the profit is very high, obviously the tax that they have to pay is very high. Smartly, what they do is in the remaining 2 or 3 months left, they will somehow plan to buy asset, and they'll record the entire asset value as expenditure in the books of accounts, where in the P&L account. Because I'm talking about a period where there was no concept of matching principle. There is no difference between capital expenditure and revenue expenditure. According to them, any money that I'm spending in the business for the business, any money that I'm spending in the business for the business is expenditure, and I can record the entire expenditure as expense in my P&L. So in the last 2-3 months, very smartly, they used to plan to buy an asset. Even though at that point of time, the asset was not required, they somehow purchased an asset to bring down the profit. How? When I record more expense, high value expense, the profit will come down, thereby the taxes will come down. So this was the kind of a practice that was prevalent long ago, and therefore the government of India deployed a responsibility on the heads of the ICAI, telling that you please come out with proper rules and regulations that the enterprise has to follow while doing the accounting. Not just that, also you have to come out with rules and regulations that how an entity should be preparing and presenting the financial statements. That is when the ICAI had come out with the rules and regulations called as accounting standards. About accounting standards, what is accounting standard? What is Ind AS? What is GAAP? That is something which we'll be discussing at the end of the CA Foundation. So all we have to understand is that the government of India had given a huge responsibility to the ICAI to frame the rules and regulations required for accounting, presenting the financial statement, and preparing the financial statement. To take care of this, ICAI has been given the responsibility. Therefore, ICAI tried to understand what is the problem that is being faced by the organizations and the government. Accordingly, they came out with the solutions. They said that from now onwards, no organization will record the entire capital expenditure in the P&L. Rather, you will take that capital expenditure where? In your asset. To the extent you're using that asset in the current year, to the extent the benefit we are receiving in the current year from that asset, to that extent only will record the expenditure. So they came out with the concept of matching principle, which says that record that much quantum of expenditure only which is contributing to revenue of that year. So if I'm buying a plant and machinery which is going to benefit for 10 years, I will get the benefit for 10 years. In that case, you cannot record the entire expenditure in 1 year itself. If the benefit is coming over a period of 10 years, the cost needs to be broken down, or the cost of the asset should be allocated over a period of 10 years. This is what matching principle said. In this process, they gave a difference between what is revenue expenditure and what is capital expenditure. It was very important that the accounting bodies come out with the difference between revenue expenditure and capital expenditure. So what is revenue expenditure? Revenue expenditure is an expenditure incurred in the business for the development of the business. But the benefit what we get from that is consumed fully, 100% consumption in the same financial year. There is no carry forward of benefit. In that case, you can record the entire expenditure in that year itself. But there are certain expenditure where we incur the expenditure for the development of the business, but the benefit comes to us for more than one financial year. Then that expenditure becomes your capital expenditure. So revenue expenditure, 100% consumption, 100% record in the same year. Capital expenditure, if you get benefit for 5 years, record that expense for 5 years. If you get the benefit for 10 years, record the expenditure for 10 years. So therefore, they have to come out with the difference between the two and make people understand how this has to be done. Further, apart from this accounting principles and differences, they came out with something called as accounting standard. AS10 talks about property, plant, equipment. In that specifically, they came out with the different ways in which you can calculate depreciation. They came out with the ways how do you account for depreciation. So they developed a complete standard so that the users could be guided or the accountants could be guided how the depreciation is supposed to be calculated and how it is supposed to be accounted. And that is what we are going to learn in this entire chapter. Am I loud and clear?
Yes, sir.
So why depreciation? If the concept of depreciation was not there, then you would have recorded the entire expenditure in one shot. To prevent you from recording the entire cost in one shot, they came out with the concept of depreciation. That is when the birth of depreciation happened. So what is depreciation? So depreciation is that part of the asset which has been consumed. The benefit from that is consumed in that year. 10 lakh ka machinery I purchased. In that, I've used that machinery for entire 1 year. 10 lakh ka machinery I purchased. Life is 10 years. 10 lakh is the cost of the machinery. Life is 10 years. Then what is the cost for 1 year? 1 lakh. So entire 1 year, if I use the asset, we feel that or we say that yes, 1 lakh worth of asset is being used. Out of 10 lakh, 1 lakh is used. 9 lakh is unused. So 1 lakh worth of asset that is used is called as depreciation. So depreciation is that part of the asset from which the benefit is consumed in the business for that financial year. Okay, not okay?
Yes.
Easy? No. Next point. What is depreciation? So depreciation is reduction in the book value of the fixed asset. Book value means what? The value of the asset that you procured. That value constantly every year will fall. The reason for fall in the value of the asset is depreciation. Now, why depreciation leads to fall in the value of the asset? Because depreciation is arising because of the concept of wear and tear. Means what? The more you use the asset, the value of that asset in the eyes of people falls down. When you use more and more asset, the value of that asset falls down. I gave a classic example of Activa, which I purchased almost 15 years ago. The value of that was different, 65,000. I told that was the value, yeah, 65,000. After 15 years of usage, if I want to sell this to somebody else, nobody will pay me more than 5,000. So from 65,000, it came all the way down to 5,000. How much is the fall in the value? 60,000, there is a fall in the value of the asset. Which means 15 years later, nobody is willing to pay me same 65,000. So fall happened or not happened? Happened. Fall happened for how much? 60,000 rupees. What is the reason? Sir, wear and tear is the reason. Wear and tear ka another name is what? Usage of the asset. Usage of the asset will lead to wear and tear. And because of that, the value of the asset got reduced. So one of the reason for reduction in the value of the asset is usage of the asset, which is also called as wear and tear of the asset. Any problem here?
No, sir.
This is one reason. What is the second reason? Effects of time. Certain time, even if you don't use the asset, even if you do not use the asset, the value of the asset reduces over a period of time. The classic example I gave you is for leasehold property. I took the land for 2 crores. 2 crores for using that land for 20 years. Whether I use the land for the purpose for which I procured or not, whether I use that land or not, every year out of 2 crore, how much will get depreciated? 10 lakh will get depreciated. How, sir? 2 crore. 2 crore is the value of the asset. Divided by 20 years means every year, how much will I depreciate? 10 lakh I'm supposed to depreciate. Even though I'm not using it, I have to depreciate so much. So there's a constant fall in the value of the asset, and that is because of effects of time. Certain asset, as the time passes, the value of the asset will reduce, whether you use it or not use it. The value of the asset will fall down. And in both of these cases, the fall in the value of the asset, is not steep, fast. It is very slow and gradual. Gradually, every year, little by little, it will fall down. But when it is obsolescence and accident, the fall in the value of the asset is going to be very steep and fast. So we took an example that I purchased an asset for 10 lakh rupees. 3 years I depreciated for 3 lakh rupees. And the value of the asset is 7 lakh. Somewhere in the middle of the 4th year, what did I do? I saw a new machine. So I wanted to buy that machine and scrap this machine. And I had the place to only put one machine in place. So therefore, the old machine, I scrapped it. I got nothing in return. So now this value of the asset in my books should not be there because I scrapped it. If physical asset is not there with me, I can't have the value also in my book. If the physical asset is not with me, value also of that should not be there in my books. When physical asset is gone from the factory, then the value of the asset from the book also should go out. It means it should become 0. So how do I make this 0? 7 lakh worth of asset, how to make it 0? Depreciation. So full 7 lakh depreciation. Why? Because now I'm not going to benefit from this asset for next year onwards or from next year onwards. So therefore, the entire 7 lakh rupees is recorded as depreciation. And the reason for depreciation is what? Obsolescence. Means what? This machine has become outdated. And to replace that, a new machine has come with a new efficiency. So therefore, this asset has been scrapped. So this is the concept of obsolescence. Now here, in one shot, from 7 lakh, the value of the asset became zero. In 1 year itself, the value of the asset from 7 lakh became zero. So whenever the reason is obsolescence for depreciation, the fall in the value of the asset is very steep and very fast and very rapid. 1 mark question will get this in exam. What is the meaning of obsolescence? This point is not there explained in the CA foundation book, but still they can ask, what does it mean? What does it mean? Whatever is there in the ICA study module alone, if you study, whether it is for foundation or whether it is for inter, it is not sufficient. You should know nook and corner of that chapter. You should know the nook and corner of that chapter. So understanding every single element of the chapter is very, 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 very important. So in that place, this TSG book will help you a lot. The TSG book has got a lot of theory involved in it. Plus, different variety of question has been given. So when you are trying to work out different varieties of question, the hold that you have on the concept will become very, very stronger. Then the last example was accident. Same example. I purchased asset for 10 lakh rupees, used it for 3 years. After 3 years, what is the value? 7 lakh. Then this particular machinery got destroyed by a fire accident. It is no longer usable. So I had to scrap it. So now, since the asset is physically not existing in the factory, the value of that in book also should be made zero. To make the 7 lakh worth of asset zero, what am I supposed to do? Minus 7 lakh in form of depreciation. So value of the asset becomes zero. So what is depreciation? Fall in the value of the asset from 7 lakh to zero. And the reason here is accident. In accident also, the fall in the value of the asset is very steep, rapid and fast. Then, in your textbook, there were other reasons given. One was wear and tear, effects of time, obsolescence, decrease in market value. Sometimes the value of the asset, what is there in your book? The book value of your asset is 10 lakh rupees, let's suppose. Book value means what? What is the meaning of book value? Original cost minus depreciation. The value that is coming after minusing the depreciation from the original cost is called as book value. Book value means what? The value of the asset which is at present recorded in my books of accounts is called as book value. The book value of the asset is 10 lakh. When I try to compare this with the market value, it was only 8 lakh. So in your viewpoint, your asset was worth 10 lakh. But when you went to market and asked for what is the worth of my asset, people said this is not more than 8 lakh rupees. So now you have to reduce the value of the asset from 10 lakh to 8 lakh. So 2 lakh subtracted. Depreciation 2 lakh here. So that 2 lakh is what? Because of decrease in market value of the asset. Decrease in the market value of the asset. This is one of the reasons. So how many reasons in total? 5 reasons so far. First is wear and tear. Wear and tear is basically usage of asset. Second is effects of time. Third, obsolescence. Fourth, accident. Fifth, decrease in the market value. Sixth one is depletion. Is the main. Okay, this is for mines and other natural resources. This is one extra point, but in what you call general scenario, we take the 5 points that I discussed so far. Any problem?
No, sir.
Online people, any problem?
No, sir.
No, sir.
I'm thinking not to take too much of theory and make you all dull. Can we go directly to practical questions?
Yes, sir.
Which means nobody wants to study. Okay, theory, what I'll do is, I will do it, but not now, at the end. Once you completely get a good hold on the chapter, then we'll come back and do some important topics as to what is the characteristics of depreciation. Right? What is the meaning of depreciation? We already learned. What is the meaning of amortization? We'll take care of. This both will be taken care as and when we do that practical question. Yeah. Then we'll come back and study what are the 3 important factors for computing depreciation. Basically, there are some 3 or 4 theory points which I have to discuss. So I feel rather than discussing now, it is best that we discuss at the end. Once you get the practical, chapter, like once you get the hold on the practical topics, then we'll come back and do the theory. So now let's get into practical question. Now we are going to learn what are the different methods for calculating depreciation. There are methods for calculating depreciation. There are methods for accounting depreciation. In that, what am I talking about now? Calculating depreciation. Calculation means mathematics. How the depreciation needs to be calculated. For that, you have how many concepts totally? 6 concepts. Concept number 7, 8, 9 is been deleted from your syllabus. It is neither there in foundation nor there in intermediate. Out of the 6 points, the first 2 points you've already discussed in your 11th standard. So again, we are discussing the same point. There are totally 6 methods for calculating depreciation. In that, the first method is called as straight line method. Straight line method. The second method is called as written down value method, shortly and sweetly called as WDV method. Straight line method, shortly and sweetly called as SLM method. Actually, it is SLM or SL method, but we are habitual to call that SLM method because straight line method क्या होता है? SL method and WDV method. Third is machina rate method. This is brand new topic for all of you. Production unit method, depletion method, sum of years, digit method. Today we try to understand what is straight line method. Meaning of straight line method. In straight line method, depreciation is charged on the original cost every year. Now we have to understand what is the meaning of original cost. First, we have to understand what is the meaning of original cost. Second, we have to understand why depreciation is charged only on the original cost. Two things you have to answer. Sir, first, what is the meaning of original cost? Second, why is it that in SLM method, you always calculate the depreciation on the original cost? In SLM, the amount of depreciation charged is same or equal every year. And hence the value of the asset becomes zero at the end of its useful life. This theoretically I read, you understood, but you could not visualize. So that you will understand only when I do a practical question. And I'll come and relate this point one more time. When to use SLM method? So this was one very famous question. A lot of people wanted to know the answer, but nobody knew this answer. Why or when to use SLM method? That is, I'm an organization, I'm an entity. How should I know that whether I should use SLM for my depreciation or WDV? Use SLM when the asset gives equal and constant benefit every year over its useful life. Now also you read it. Nothing went here. For that I have to explain. So this also I'll explain. Now, now listen to me very carefully. All this I meant to discuss. I just read the theory. Important point. This is the note. Once I make you understand later, then come back and read this. It'll make more sense. I just read it to just put a seed in your mind. I meant to pour water on it, pour manure on it. All that one by one, gradually, I'll do it. Now, if you are getting a question which says that calculate depreciation as per straight line method. If you get a question which says that calculate depreciation as per straight line method or in accordance to straight line method, how can you do it? There are two ways in which you can calculate the depreciation. First is when rate of depreciation, ROD stands for rate of depreciation is not given. Second is when rate of depreciation is given. Let me take one example. Cost of machinery. ₹11 lakh. Estimated useful life is 10 years. Is 10 years. I use the word estimated useful life. First of all, what is the meaning of useful life? What is the meaning of useful life? You have purchased a machinery for 11 lakh. And we say that there is an estimated useful life of the machinery 10 years. What is the meaning of useful life of the asset? Means you are predicting that this asset will long only for 10 years. After 10 years, you feel that this machinery will not be productive enough. Hence, we might have to scrap it or sell it. And this you are not 100% sure. It is your prediction. Therefore, we use the word estimated, because nobody can be sure that what is the life of the machinery going to be. You are purchasing a laptop. Can you say this laptop will work only for 5 years? It can work for 5 years. It may work for more than 5 years, or it may work for less than 5 years. It is purely depending on how you use the asset. The life of the asset is purely dependent on how you use the asset. And during that period, how well you maintain the asset. That will determine what is the life of the asset going to be. Correct? No? That's why we say that life of the asset we are going to estimate. Okay. Now, forget all the formulas. You have to apply your common sense. This is the expenditure that you have done in the business. 11 lakh is the expenditure. This is the money spent for acquiring asset. Your objective is to capture this or capture a part of this as your expenditure. You have to record the expenditure. As a businessman, I know only one thing. I spent money and I need to record this as my expenditure. Since the rules is not allowing me to record the entire 11 lakh as expense in 1 year, I have decided to record this expenditure over a period of 10 years. So you please tell me what formula best fits here. You create the formula. How people applied the formula, I'll tell you. They didn't sit and do all these formulas directly. They applied the concept. They used a technique called as vegetable vendor technique they used. What is that vegetable vendor technique? 3 கிலோ தக்காளி 90 ரூபா. அப்ப 1 கிலோக்கு எவ்வளவு? 3 kg tomato 90 rupees. How much for 1 kg? This is called as VV technique. In your school, you call this as cross multiplication method, also called as unitary method. Unitary method, whatever name you say. But we call this as, I give the credit to vegetable vendor. The formula, this concept of birth happened from whom? Vegetable vendor. Now onwards, whenever you go back home or come to academy, on the way, if you find any vegetable vendor, fall on the road. Sir, because of you only, I'm able to crack all the formulas. Where I was about to sit and by heart all the formulas. Because of your technique, I am creating the formula. Why? Because every single formula in accounting is coming from vegetable vendor technique. Every single formula. I proved this multiple times in 11th and 12th also. Every single formula that is coming in your accounting is based on vegetable vendor technique. So one more time, sir. Very simple. 3 kg tomato, 90 rupees. Then for 2 kg now, how much? Cross multiply. 90 rupees into 2 kg by 3 kg. So 90 rupees by 3 kg. 90 if I divide by 3. I break this 90 in how many parts? 3 parts. If I multiply with 2, I get 2 part ka value. If I multiply with 1, I get 1 part ka value. If I multiply with 4, I get 4 part ka value. So in same way, 11 lakh rupees is the cost of the asset. And you said the life of this asset is 10 years. 11 lakh is the cost of the asset, which have to use it over a period of 10 years. 10 years, for 10 years, the cost of the asset is 11 lakh. For 10 years, the cost of the asset is 11 lakh. Therefore, for 1 year, how much? Cross multiply. 11 lakh into 1 by 10. Into 1 by 10. Into 1 year by 10 year. 11 lakh into 1 year by 10 year. What is this 11 lakh? What is 11 lakh? Cost of the asset. Cost of the asset. Into 1. Into 1. For always, this value that you multiply is going to be 1 year. For 1 year, how much? If 10 lakh is for 15 years, then for 1 year, how much? So always into 1 is going to be constant every time. So anything multiplied into 1 is what? The same value. So what they did, they removed this from the formula. And 10 years is what? Estimated useful life. So 11 lakh is the original cost of the asset. 10 years is estimated useful life. Now what formula they created? Original cost divided by estimated useful life. This is how the formula they created. But this formula is coming from where? Vegetable vendor technique. We don't go into the formula. We only sit and try to buy at the formula. Buy at the formula. One formula, easy to buy at, no pressure. 100 formulas, full pressure. So if you know, if you understand how the formula is created, if you understand the concept, because at the end of the day, this formula, who created, boss? Did your computer create? God created. Who created? We human being created. So if you know how that human being applied the mind and created the formula, you can also apply the same thing, no, boss? So from here onwards, don't take any stress. Don't take any stress to buy out the formula. Understand the logic behind every formula. So now the formula is what? Original cost. Original cost divided by estimated useful life into 1 year. In every formula, this 1 year is common. They said anything multiplied by 1 is the same value. So why to put 1? So they removed 1. They removed 1. Any difficulty? Now, original cost divided by estimated useful life is how much? 11 lakh divided by 10 years is how much? 1,10,000 rupees is the usage value of the asset every year. 1,10,000, you will say depreciation. What am I saying? This is the worth of the asset that you have used in the current year. Worth of the asset used in the current year. So it's a big sentence. No? Every time if I say, what is the worth of the asset used in the current year? Every single time in the conversation, if I say, it's very elongated conversation. We want a crisp conversation. So we shrink that entire sentence called as depreciation. So depreciation means what? Worth of the asset used in the current year. You use the asset in the current year to the extent of 1,10,000 rupees. Any problem here? Which means every year, how much depreciation will you record? Assuming that you purchased the asset on 1/4 of 1 year and sold it at 31st March of the 10th year. Assuming that you purchased the asset on 1/4 of the first year and you sold it at 31st March of 10th year. So how many years you've used the asset? 10 years. So my question to all of you, what is the depreciation going to be for first year? 1,10,000. Second year, same 1,10,000. Third year, fourth year, fifth year, sixth year, seventh year, eighth year, ninth year, 10th year. Every year, 1,10,000, 1,10,000, 1,10,000, 1,10,000, 1,10,000. Correct? Every year, if I use same value for 10 years, what is the total depreciation at the end of the 10th year? I am asking what is the total depreciation at the end of the 10th year? 11 lakh rupees. Which means at the end of the useful life, when is the useful life ending? 10th year it is ending. At the end of the useful life, after 10 years, the value of the asset should be zero. How, sir? Cost of the asset 11 lakh. Total depreciation for all the 10 years is how much? 11 lakh. Cost of the asset is zero. How is it? Second feature of this is that every year the depreciation is same. Amount of depreciation every year is same. In SLM, the amount of depreciation charged is same or equal every year. Hence, the value of the asset becomes zero at the end of its useful life. I said you. When I read this point, you didn't understand. But if I explain it, you will understand. Now tell me, how is your understanding on this point? I explain this point with a practical example. One more time, sir. Very simple. I'm talking about the second point. What am I saying? If you are following straight line method for calculating depreciation, the amount of depreciation that you charge every year is going to be same, puppy, same. And hence the value of the asset becomes zero at the end of the useful life. Cost of the asset 11 lakh. Total depreciation 11 lakh. So value of the asset at the end of the 10th year is zero. Hence second point proved. Now tell me what doubts you have. There should be a smile on your face. Oh wow, nice, super. Aha. எல்லாமே உருன்னு இருக்கீங்க. Sir, but in our school they taught different formula, sir. Minus residual value. That I didn't come. No, I'm going gradually. First, when you studied, what standard you studied? Well, directly first standard you studied. Before that UKG is there. Before that LKG is there. Before that what is that? Pre-KG. Now pre-nursery. Play school. Play school. என்னமா படிச்சா நம்ம பையன் என்னென்ன படிச்சான் play school படிச்சா அதுக்கப்புறம் pre-KG then LKG then UKG. How many KG? So now what I taught was play group. அது என்ன படிச்சோன்னா play school. Play group, play school. Play school questionல எடுத்தோம். எடுத்த உடனே estimated scrap value போட்டா எப்படி இருக்கும்? That is LKG question. You have to wait. First play group over. Play group clear or not clear? That much you tell me. Clear? Okay, wonderful. Now next example. Example 2. Cost of the asset 11 lakh. Means as a businessman we have spent 11 lakh to buy a machine. Estimated useful life, EUL. Short form, you understand? Okay. How much? 10 years. Now what you have done is the person from whom you have purchased the asset, no, he has told one point to you, telling that, sir, you use this asset. At the end of the 10th year, don't give this asset to anybody else. Give it back to me. I will buy the asset from you. Who is saying this? The seller of the machine is saying that, sir, use this asset for 10 years. After 10 years, you will think this asset is useless, no? And you will want to scrap it, sell it. Don't sell to anybody else. Give it to me itself. Now what will I say? Okay, that time you'll see. In that case, I may give him or I may not give him. So therefore, to lock me, what the seller will do? He will put a contract with you. Sir, no, Kandipa, you have to sell this asset to me only. You have to sell an asset to me. So in that, what did he do? He agreed the purchase value. That is the value at which you will sell the asset back to that fellow that has been agreed upon. That is called as estimated scrap value. So when he's agreeing the price on approximation basis. He says that depending on how the condition of the asset is, I might give you somewhere in the range of 50,000 to 1 lakh. Or 1 lakh to 1.5 lakh rupees. I'll give you an approximate rate. Because exactly nobody can tell. Because how I'm going to use the asset for 10 years, rough or smooth, I don't know. Nor the seller knows. So therefore, he says that whenever you sell it, sir, give it back to me. I will take it at the fund scrap value. And approximate range of scrap value is giving you. Approximate range is giving. So based on that, what do we say? Okay, let's estimate the scrap value to be how much? 1 lakh rupees. For convenience, I'm taking 1 lakh. Now you have two choices. One choice is that this 11 lakh rupees you depreciate for 10 years and every year you record 1,10,000 as depreciation. Okay. If I do so, the total cost of the asset is 11 lakh. The total depreciation for 10 years is 11 lakh. Original cost of the asset, the remaining value of the asset, the WDV of the asset is 0. Whatever I sell, scrap value is 1 lakh. The entire 1 lakh is profit. We can do this way. Or alternatively, experts have suggested that when you know that this money is going to come back to you in future, why do you want to show this as a profit? Profit means what? I'm doing something on purpose to earn this 1 lakh rupees. I'm buying this pen, selling this pen. The intention is to make profit. Here, this 1 lakh rupees profit, what are you making? Is it your intentional profit? No, it is just happening in the due course. So why do you want to call this as profit? So experts suggested that we'll do one thing. Why do you depreciate the entire 11 lakh? In this 11 lakh rupees, 1 lakh anyways you're going to recover in future. 1 lakh you'll get in future. So minus 1 lakh, what is the remaining cost of the asset? 10 lakh. This is the remaining cost of your asset. This is the remaining expenditure of your asset. So why don't you depreciate only the remaining net cost? Why do you depreciate the entire value, then record this 1 lakh as your profit and income and show? Why to do double work? Instead, record the 11 lakh in the books of accounts as original cost. You minus the scrap value. On the remaining 10 lakh rupees, you calculate the depreciation. I'm talking about the calculation part. I'm not talking about the accounting part. I'm talking about the calculation. So now one expert suggested that we will now not calculate the depreciation on the original cost. We'll calculate on the net cost. So he said that 11 lakh is original cost minus 1 lakh estimated scrap value divided by 10 years, which is estimated useful life. And all of us be accepted. So how much is my depreciation every year? 1 lakh rupees. So year 1 lakh. Year 2, 1 lakh. If I keep on going, year 10, again 1 lakh. Total, how much depreciated? 10 lakh depreciated. Every year 1 lakh means for 10 years, 10 lakh depreciated. Now, the original cost of the asset in your book is how much? 11 lakh. Cost of the asset. When you record the value of the asset in the book, machinery, machine record debit to bank, you will record 11 lakh only. From that, you will minus the total depreciation, which is 10 lakh. Now, what is the remaining book value of the asset? 1 lakh. 1 lakh worth of the asset going out, 1 lakh worth of money coming in. So, sale value 1 lakh. No profit, no loss. So, out of 11 lakh, what you spent, 10 lakh worth of asset, used it. Remaining 1 lakh worth of asset, you got the money in return. Everything is balanced now. 11 lakh I spent originally. In that, how much worth of the asset I used in 10 years? 10 lakh worth of asset used. For that, expenses recorded. Every year, 1 lakh, 1 lakh, 1 lakh, 1 lakh, depreciation recorded. How much expenses not recorded? 1 lakh. For that, I'm getting paisa at the end of the 10th year. Either you allow me depreciation or give me the money back. I'm benefited. So this is one method, and all the experts agree to this particular method, telling that we'll do this way only. Why? To have uniformity. In our accounting standard, they don't give too much flexibility. They don't give too many options, because we Indian, when we get option no, we become mad fellow. We get very excited. Oh, this option is also there. This option is also there. People make fusion of it, khichdi of it, and everything at the end becomes utter nonsense. So accounting standard, I'll be talking about what is accounting standard, what is ASB, everything at the end of the foundation course. That will be the last chapter of the CA foundation. Accounting standard has limited the multiple option which is earlier, or which is now also available in the international accounting standards called as IFRS. In IFRS, you are being given multiple options to choose whatever you want to do. Based on your situation, you choose whatever you feel like doing it. But in India, we restricted those options, telling that if we give too many options to our people, they'll get confused. We will not have uniform answer. Every time the answer will be continuously differing. So therefore, to ensure uniformity, we said what? We will follow unanimously this part. Same thing happened with you in school also, no, boss. There are multiple ways in which you can do accounting. But what did your book tell? No, do accounting only in this way. Do accounting only in this manner. Whereas accounting could be done in multiple ways. But they said, no, do it only in this manner. Why? Because for a given question, all the students should present the answer in same way. Correction becomes easy. Therefore, they said that, no, do only this. Don't go for any other alternative methods. Same way, ASB of ICI, that is Accounting Standard Board of ICI, came out with the accounting standard saying that no, will not give multiple options, will stick on to one option. So hereafter, whenever you're trying to calculate amount of depreciation under SLM method, when ROD is not given, the formula that we developed is original cost minus estimated scrap value divided by estimated useful life. Why are we minusing estimated scrap value? Because in future, anyways, I'm going to get that amount. So why to depreciate that and later show that as profit? So what we did in CRESP, we'll minus that value itself, and we'll have the net cost that we will depreciate for the life of the asset. That is how this formulas come into picture. How do you calculate the amount of depreciation? Original cost minus estimated scrap value divided by estimated useful life. What is the meaning of estimated scrap value? Approximately, I told you. Normally in this, what happens? The seller of the machine, he will agree or contract with the buyer telling that 10 years down the line, 12 years down the line, if you are selling the asset, I would want to buy that asset. Now, why is he buying the asset? He's got his own interest in it. He feels that the component inside that machine, he can take it and then he will scrap it. He doesn't want the machine so that he can use it. The machine, he wants it because in that there is a certain important component whose life is for more than 10 years. So that he feels that if I take that part alone and if I sell it, I'll get more than 1 lakh rupees. So he knows what is the crucial component inside. You and I will not know that because we're not technical people. The person who is manufacturing in the machine, he knows that in this, what is that important component. So he feels that by giving 1 lakh rupees and getting this machine back, I will take that part of component which you can sell it for more than 1 lakh rupees. That is the greed behind that person. Next is what? Estimated useful life. That also logic I gave you. I meant to teach you what is the meaning of original cost, which I'll do it shortly. Second, once the question tells you to calculate the amount of depreciation, the very next question that it will ask is please help me to calculate the rate of depreciation. Means what? You help me to calculate the percentage of depreciation. Now, how will you calculate? How will you calculate? I want to know the percentage of depreciation. How much is depreciation every year? If I go with this formula, if I go with the second question, 11 lakh is the cost of the asset. In that, 1 lakh is the 1 lakh is the scrap value. So 10 lakh is the remaining cost of the asset divided by 10 years. Okay. So now this is the amount of depreciation every year. Do you agree with me? I'll do it here if you want. Original cost 11 lakh minus estimated scrap value 1 lakh divided by estimated useful life 10 years. How much is the amount of depreciation? 1 lakh is amount of depreciation every year. So I want to know this 1 lakh is how much percentage of original cost. So rate of depreciation I want in percentage. So 1 lakh, I have a question to all of you. Will you do 1 lakh on 10 lakh or into 100? I want in percentage, no? So I should multiply with 100. So 1 lakh by 10 lakh into 100 will I do? Or I'll do 1 lakh upon 11 lakh into 100. Which is correct? Which is correct? Option 1 is correct or option 2 is correct? Fast. Option 1 or 2? 1. 1. 1 or 2? 1. All of you. 1 or 2? 1. Okay. All those who say 1, raise your hands. Okay. Majority of the people. Okay. Keep your hands down. Gautam says okay. Online Gautam is raising his hand. Those who say 2 is right, raise your hands. Minority people. Oh, wonderful. What was the formula that you studied in your 11th standard? How to calculate ROD? Amount of depreciation divided by original cost into 100. Then why the hell did you say option 1, method 1? That is not original cost. Original cost is without minusing. Those who said option 1 is correct. Those who said option 2 is correct. Both of you are correct. Both of you are correct. How can it be wrong? 1 lakh by 10 lakh into 100 is how much? 10%. And 1 lakh by 11 lakh into 100 is how much? 9.09%. Both percentage are right. Now the fact of the matter is that this 10% on what you apply, that determines whether the answer is going to be right or wrong. Percentage is correct. This 10% you got, taking what as a base? Net cost as a base. Net cost means what? That cost which is coming after deducting scrap value. 11 lakh is the original cost. From that 1 lakh scrap value deducted. So what is the net cost? 10 lakh. You keep the 10 lakh as a base and I calculated this 10%. So if the ROD percentage is applied on net cost, if that is what experts are suggesting, then this percentage you will apply. This 9.09% you calculated how? Keeping what as a base? Keeping 11 lakh as a base. 11 lakh is original cost. So this ROD percentage is right if you apply this percentage on original cost. Can we apply and see? Now you said ROD 10%. Now this 10% I should apply on what? 10 lakhs. So 10 lakh into 10%. How much it is? 1 lakh. Original cost is how much? 11 lakh into 9.09%. How much? Same 1 lakh you're getting. So same amount of depreciation. Boss. So both of you are correct. Option 1 is also correct. Option 2 is also correct. But experts said that when you are following provision for depreciation method, PFD method. What is PFD method? You don't record depreciation in the asset account. Where do you record? In the PFD account. So whenever you are maintaining the depreciation under the PFD method, always the value of the asset will be reflecting at original cost. Now you understood why I gave 11th standard video. Because here I wanted to explain this point. Those who know what is PFD, instantly you will be able to connect. Or else you have to wait for me to do PFD. There are two methods for accounting depreciation. In state board, you studied only one method, where you record the depreciation inside the asset account. What entry for depreciation? Depreciation to plant and machinery. Correct? No. This is one method. In 11 CBC, we had one more method called as depreciation to provision for depreciation. So when you go for method 2 of accounting depreciation, the value of the depreciation is not getting inside your machinery account. Therefore, always the machinery account will be stated at the original cost. So when I look at the balance sheet accounts, what is instantly available to me? Original cost is available to me. So if I have a percentage on the original cost, will it not be easy for me? Because when I take the balance sheet of any company which is following PFD method, if I take balance sheet of any company which is following PFD method, always the cost of the asset will be reflecting in the original cost. If you take the balance sheet, machinery account balance will be how much, 11 lakh minus provision for depreciation. Let's say 3 years depreciation you recorded. So 1 year ka depreciation 1 lakh. 3 year ka how much? 3 lakh. We call that 3 years depreciation together called as accumulated depreciation. When I combine multiple years depreciation together, we call it as accumulated depreciation. So accumulated depreciation is how much? 3 lakh. Accumulated depreciation is also called as provision for depreciation. So what is the remaining value of the asset? 8 lakhs. Now this is the balance sheet. When you are following PFD method, the value of the machine will be always stated at its original cost. This I'll prove it to you when I do the depreciation, both the methods. No, that time you'll be able to digest what I'm saying. Those who have done 11 CBC with me, the recordings, you will be able to understand what I'm saying right now. So the original cost is that cost which is available to me easily. Net cost is not available. Net cost is how much? 11 lakh minus 1 lakh scrap value, 10 lakh. This is not easily available with me or to me in the accounts. So for me, it becomes very difficult every year to calculate depreciation percentage on this 10 lakh rupees. Because what is readily accessible to me, which I can see every time, original cost is visible to me every single time. So experts said that do one thing, calculate the percentage on the original cost. We will follow this. So this is also not wrong. The problem here is that every year I should calculate depreciation. No, for that I need 10 lakh. How to get 10 lakh? For that I need the original cost 11 lakh. For that I need to have a contract to see what is the scrap value every year. So minus 1 lakh, then 10 lakh on that 10%. So it is very tedious, time consuming job. So experts said that let's not calculate the ROT percentage on the net cost. Let's all unanimously calculate the ROT percentage on the original cost. So we all agree to this. Hence, this became the final formula. So everywhere, every school, college, academy will teach you, this is the formula of ROT. But why this is there? Why this is not there? Nobody will teach you that concept. Now, why this concept is important? ICA will never ask you all this question in exam. Do you think ICA will ask all this question in exam? No. Then, sir, why are you teaching this? ICA will not ask. Chances are there your junior might ask. Or your senior might ask. Or when you go to articleship, from there you go to client office to do auditing work. There one client is accountant who has done CA halfway through, could not clear, will have one eye on you. Oh, one ani, oh, CA padikiriya, va 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 va. Na kekran par kelli unaku. Ama veppo or kelli, for which you will not be able to answer. That time you'll have a guilt feeling. Inter completed, don't even know what basics are. That time it will prick you. That's why we didn't study properly from Prathik sir. The ultimate objective of you studying CA with me is not just to clear the CA exams. You also need to know that concept so that tomorrow, if you're being questioned anywhere in your workplace, you'll have that much sensibility to answer people and save your reputation there, which I couldn't back then when I did my articleship. Because I was asked a lot of questions. I had no answer to what question they asked. Multiple. And there are many questions I forgot also. That's why I feel that it is my moral responsibility to teach you everything from scratch and basics. If you can get it, well and good. Or else, God bless you. Now, if somebody asks you, what is the ROD ka percentage? I mean, how do we calculate ROD percentage? What will be the formula? Amount of depreciation upon original cost into 100. If somebody asks, if I take net original cost, is it wrong? That is still right. But the percentage what I get, I should multiply only on net original cost. If that is available easily, I will use that. Since availability of that is very difficult, then unanimously all of us will agree we'll go with this. Because original cost is more easily accessible than net original cost. So to make our life easier, we have come out with this formula. Otherwise, that formula is also correct. But the base has to change. The base has to change in that formula. In exam, which formula will you write and come? This cost, this formula, original cost ka formula. Wonderful. Now, you did something here. What did you do? ROD percentage 9% you calculated, no? ROD percentage you calculated. And using this percentage, I asked you to calculate the depreciation. How did you calculate? Original cost into rate of depreciation is what? Amount of depreciation. This brings to your method 2. What is method 2? When ROD is given. When ROD is given. So what is the way to calculate amount of depreciation? Original cost into ROD percentage. If you have used the asset for entire 12 months into 12 by 12. 12 by 12. 12 by 12 is 1. Anything multiplied with 1 is same value. By chance, if you have used the asset only for 7 months, so original cost into ROD percentage into 7 by 12. Because original cost into ROD percentage is for per annum. This 9.09% is for per annum. Per annum means how many months? 12 months. I want to know for 7 months. I want to know for 7 months. This formula is also coming from vegetable vendor technique. For example, 1 lakh is a depreciation for 12 months. Then for 7 months, how much? Cross multiply. 1 lakh into 7 by 12. How did we get this 1 lakh? Original cost into ROD percentage. 11 lakh into 9.09 percentage. I got 1 lakh into number of months by 12. This is how they developed the formula. Again, this formula is coming from which technique? Vegetable vendor technique. 2 formulas I proved you that it is coming from VV technique. Imagine how much long we have journey to go. Time and again I'll prove you. Every single formula is derived from here. Which means if you're getting stuck anywhere in remembering the formula, if you know the concept, you can create your own formula. That application of mind you need to develop. Any difficulty? Online people, any difficulty?
Sure.
So this is the formula, people. ROD is equal to amount of depreciation upon original cost into 100. So ROD is X here. Amount of depreciation given, original cost given into 100 we know. Same I want to know what is amount of depreciation. So how will you revise the formula? Keep amount of depreciation here itself. ROD into original cost by 100 is equal to amount of depreciation. Same formula I've rephrased it. Till 10th all of you studied max. So I'm sure basic this is all of you must be knowing how to calculate X value. Now how do you rephrase this value? How do you rephrase this formula? Original cost into ROD by 100. I'll get what? Amount of depreciation. So this formula, twist and turn, you get multiple formulas. Now tell me, are you supposed to sit and by heart this formula separately, this formula separately, this formula separately? Not required. Online people, do you agree with me? Required or not required?
Not required.
Not required. Wonderful. My question goes to all of you. When somebody says that the life of the asset, sorry, the percentage of depreciation is 10%. The percentage of depreciation is 10%. How do you know or how do you calculate how much is the useful life of this asset? If I say the ROD percentage is 10%, ROD percentage is 10%. How do you know what is the life of the asset? How? 10% is 10 by 100. Wonderful. Okay, then what? My question is clear. I'm telling you, based on percentage, or looking at the percentage, how can you say that life of this asset is so and so much? Logical question this. When I say this particular asset, I'll depreciate at the rate of 10%. And if I tell you, guess what is the life of the asset? What will it be?
सेम वेजिटेबल वेंडर टेक्निक फॉर 100 पे हम लोग को 10 मिल रहा है तो फॉर ओरिजिनल कॉस्ट में कितना डेप्रिसिएशन होगा तो 100 by 10 by 100 we are getting 1/10 so the depreciation is also going to be 1/10 of the original cost.
Correct, but this is so complicated now. How to make this easy?
100% depreciation
If I keep on depreciating 10%, that is, I want to depreciate this how much percentage? 100%. I have to depreciate this how much percentage? 100%. So every year, if I keep on depreciating 10%, 10 plus 10 plus 10, how long will I take to depreciate 100%? 10 years. 10 years. If my rate of depreciation is 25%, how much year I will take to depreciate 100%? 4 years. If my ROD percentage is 20%, how many years will I take to depreciate 100%? 5 years. Now, how do we get this 10 year or 4 years, 5 years instantly? One is 10%, one is 25%, one is 20%. 10 by 100, 25 by 100, 20 by 100. Now tell me how. I want to see how much of your brain is functioning and working. Your application of mind, I want to check. Tell me. One by 10. 1 by 4. 1 by 5. Apply. BB technique. I want to see your application of mind. Fast. You don't have all the day. Minus 0, minus point. Ayyo. This part I'll give as homework. You'll think and tell me. That much time you need, eh? Abhinay is like, okay, sir. Okay, give an homework. Let's see how much of application mind you develop. Now coming back. Sir, you explained everything. But you didn't explain what is original cost. So what is the meaning of original cost? This is the formula for original cost by heart. By heart. That's what you did in 11th, no? Original cost formula. Purchase cost plus commission agent plus loading charges plus freight charges plus insurance plus unloading charges plus installation charges plus trial run charges plus other charges. If any means extra. What extra I should add? I don't know.
What are expenses are incurred for procuring the asset?
Accounting standard tells. Accounting standard which 10 says that what is the formula for original cost? It says that all the cost incurred right from buying of the asset, right from you buy the asset till the asset is put to use. I buy the asset and until I put the asset into use, in between whatever expenditure is happening with regard to this asset, in respect of this asset, everything should be capitalized to the asset account. Who is saying this? Accounting standard 10, which talks about property, plant, equipment, says that all the costs that you're incurring right from buying of the asset until you put the asset into use, all that should be added together, and that becomes the total original cost of the asset. All the in between small expenses also, which is incurred in relation to asset, incurred in relation to asset, not just procurement. Even during installation process, everything should be capitalized, should be added to the asset value. Sir, example, sir. Very simple. I wanted to set up a factory. That's my dream. When will I do? I don't know. In case, if I set up a factory, I want to buy a machine and this machine is available only in Delhi. So now, please tell me, as a teacher, can I leave all my classes, go there and get the machineries? We don't have time. When you go to the market, you have to go and search which machine is better. You have to compare the quote. We have to look at the terms, who's coming with flexible terms, who's giving me credit period or not. Everything we have to do a lot of research. That requires a lot of time and I don't have time. So what I did is I appointed one agent in Delhi who's based out of Delhi. I told him, look, boss, this is my requirement. I want this machinery for this purpose. This is my budget and this is my terms. Whichever vendor is coming in my terms and conditions, including that he has to give a good quality of machine, you have to get me that machine. And for doing this work, I will give you commission. I'll give you commission. Okay, wow. Now, That agent in Delhi has finally shortlisted one vendor. I spoke to him, everything discussed, agreed. Now I decided to buy the machinery, and I made a payment of 8 lakh rupees. I made a payment of 8 lakh rupees to that vendor in Delhi, the machinery vendor in Delhi. How much paid? 8 lakh paid. That 8 lakh what I paid is called as purchase value of the asset. It is called as purchase value of the asset. So if you ask me, what is the original cost of the asset? It includes the first thing that will include is purchase value of the asset. The moment the purchase is done, the next person who will come and ask for money is who? That agent. Sir, whatever you said, I did. You paid the money also to vendor. Before the machinery leaves Delhi, I want my commission. I want my cut. He will ask commission. Now that commission, what you're going to pay, let's suppose is going to be 20,000 rupees. You will think that this 20,000 rupees I will record as revenue expenditure. But an accounting standard is coming in between and telling that whatever expenditure you're incurring right from buying of the asset till you put the asset into use, for that asset in between, whatever expenditure you've done, you have to add all of them and show this is the total cost of the machinery. So the commission what you're paying to this agent is a part of buying the asset. It is a part of buying the asset. So this also needs to be added with the machinery value. So this commission what I pay to agent is not your revenue expenditure. This is now your capital expenditure. Who says this? Accounting standard 10 says that this is a part of your capital expenditure. So now agent's commission I'm adding. How much is the purchase value? 8 lakhs. Agent commission 20,000. Now Delhi. CB stands for Coimbatore. Now, what is this? Agent box Madhya Arpana. Who is that? Agent.
Asset.
Machine. Creativity.
Sellotape.
Sellotape? Sellotape. Okay. Now, Delhi. Where is Delhi? Somewhere in North India. Where are we sitting? Somewhere in South India. How will the machine come? Like this, I'll go and take and come. MIAB travels. Anjaneya. Like that, I'll take and come. No, I need what? Transportation. I need a transportation facility. So what did I arrange? Flight. Romba expensive, ma. And after Ahmedabad crash, very difficult.
Sir, why is it going to Coimbatore today?
Delhi to Coimbatore, eh? I can put the driver and all, but that'll take a lot of time. Creativity takes time. So without driver, I'm putting image, just manage. Machinery loading. Machinery. Steering, that is steering, ma. This is light. Light, headlights. Okay, understood. My emotion conveyed. Wonderful. Now, to this Delhi person, I paid the purchase value. To the agent, I paid the commission. Now, somebody has to take the machine and load on the truck, no boss. The truck guy will not do it. He says, no, I will drive only. I will not load it. So you will call the local people for what? Loading. So what I have to pay? Loading charges. Loading charges, sir. How much? 2,500. 10,000. Agent commission, poor fellow. He did so much of work for me. I am giving 20,000 for keeping the machine on track. You want to pay 10,000. Oh, very expensive loading person. No, 2,500 is more than sufficient. Okay. Now you loaded the machine on truck. Truck guy will start like this itself. What will he ask? Sir, who will give my paisa? To give me my transportation charges, freight charges. So you have to now add what? Transportation charges or freight charges. How much? 15,000. 8,500 from Delhi. Who will come today? Mansachi lada. Kuli karani onnu me petrol salave panla. You paid 2.5 to him. 8,500 from Delhi to Coimbatore. How much petrol? This is like truck man, not your car man.
Truck में आया car.
How much you paid?
8,500.
Huh? Very good. Now, next time. Now, reached. I can't show truck moving and all now. No. So imagine. Now, truck reached our warehouse, factory, not warehouse, factory. Where is the machine sitting on? Truck. It should get on where? Inside the factory. Who will do that work? You and I will do. We don't know how to lift the machine. So, again the local people will call, Yappa, konjo erki udupa. So what charges now? Unloading charges. Unloading charges. Now, before that, one more thing will come. I forgot. No toll gate. Leave that transportation itself, everything taken care of. In between, truck meets with an accident. Machine gone. Whose responsibility? Our responsibility, not the seller. He will say, the responsibility of this machine is only till I loaded the machine. Now it is once it is loaded on the truck, it is your responsibility. So if the machine gets damaged in the accident, for us heavy loss. To protect from that loss, what will we take? Insurance. So now, insurance cost also I am paying. How much? Let's say 5,000. Too much, ma. Insurance cost 5,000 rupees. Now, truck has reached my factory. Unloading charges. How much? Same 2,500. Very good. Once the machinery is unloaded, it is kept inside the factory. Automatically, machine will be start running, sir. It will start running. Gigantic machine. Automatically run. Not possible. The Madhund AC. You're taking from the shop and coming. It is not able to run on its own. That much big machinery. Automatically run. Not possible. So you have to call an installation team. For that separate installation charges. By ACNC, installation is not free of cost. Plus 1,500 plus GST. Separately you have to pay. And that too if you're putting hole. For pipe, hole, separate 500. That hole, without dust, another 500. One person asked me, sir, hole podumodi. If you mean me put the hole, dust okay, not okay. I was like, what do you mean? Dust okay means 500. Dust not okay means separate machine is coming. That will cost 500 more. To clean dust, I have to put anyways 500 for labor. I said, no problem. Without dust, 1,000 rupees, no problem. Do it. So without dust only I did. So now, after this, we have installation charges. Now, AC not a big deal. The moment it is installed, just press button on off, AC on off, over. Machine is not like that. Machine means a huge machinery. It is series of multiple machineries. So you have to do a complete trial run. Right from beginning till end, the manufacturing process is happening or not happening, you have to do a trial run. When you do the trial run, there is a trial run charges. Installation is done by installation team. Trial run is done by technical team. So they will come, not free of cost. For that also, paisa will be charged. That money also have to pay. Trial run charges. So installation 10,000. Trial run 5,000. Okay, not okay. Once the trial run is done, means what? They'll come and prove to you. Look, boss, this is where we put raw material and that is where we're getting the finished product. Once that all is done, we say that now the asset is in a condition to be put into use. Now you can put the asset into use. So now all the costs that you incurred right from the buying of the asset till the asset is put to use will be termed now as capital expenditure. All these expenses are called as capital expenditure. You will not treat this item as revenue expenditure. So all the expenses cost incurred right from buying of the asset, right from constructing of the asset till you put the asset into use, everything should be capitalized to that asset account. Let's suppose I'm constructing building for office purpose, for academy purpose. So whatever cost is incurred for constructing the building and putting the building into use, material charges, labor charges, extra fittings, everything till I make this building usable for my purpose, all the costs that have incurred for constructing building will be capitalized to building account only. So which means all the expenses incurred right from buying of the asset till you put asset into use, right from constructing of the asset till you put the asset into use, all the in between expenditure for that asset what you're incurring will be capitalized to the asset account, will be capitalized to the asset account. On the entire value you will charge depreciation, on the entire value you will charge depreciation. Our accounting standard does not permit you to take this as revenue expenditure. Revenue expenditure means what? An expenditure separately incurred for the purpose of earning revenue. These are not the expenditure for earning revenue. These are expenditure for acquiring asset. So any expenditure incurred for acquiring asset will not be treated as revenue expenditure, will be treated as capital expenditure only. Any problem? That's why all this is come into picture. Other charges, if any, that also included. Original cost includes all the charges incurred right from buying of the asset or constructing of the asset till the asset is put to use. All the in-between expenditure is called as capital expenditure. All it is called as capital expenditure. Any problem? Online people, any problem?
No, sir.
Question 1.
No,
Sharad and Sons purchased a machine on 1st October 23 for 5 lakh against a check and also paid 20,000 for loading, unloading and carriage expenses. Carriage means what? Transportation charges to bring the machine to the factory. So 20,000 is total charges for loading, unloading, transportation, everything put together to bring the asset to the factory. The firm further incurred, the business further incurred 25,000 towards the installation charges of the machinery. You are supposed to calculate how much amount should be debited to the machinery account. Basically, they're asking you to calculate the original cost of the asset. Original cost equal to all the expenses incurred right from buying of the asset till the asset is put to use. 5 lakh is the cost of the machinery, purchase cost of the machinery. Plus you have loading charges, unloading charges and transportation charges, which is how much? 20,000. And purchase cost is 5 lakh. Plus installation charges, which is another 25,000. All put together how much? 5,45,000. Any problem? Easy. Now the question is, sir, please pass the journal entries giving effect to the above transaction. You have to pass the entry. 2 entry will pass. 1 entry separately for the purchase cost and 1 entry separately for the other expenses. So that in the ledger, we get to know these both amount separately. So what entry will you pass? Machinery. In this entire transaction, what is happening? Machinery is being purchased. Machinery is asset. All the assets are real account. All the assets are real account except bank, debtor, bills receivable, prepaid expenses and accrued income. Is machinery coming in these 5 exceptions? No. So machinery is the real account. So what is the rule of real account? Debit what comes in, debit what comes in. Machinery is coming in, so I have to debit. Machinery account debit to bank. Bank is what classification? Which person? Artificial personal account. So debit the receiver, credit the giver. If you instruct, bank has to give the money on your behalf. Credit the giver. Who is the giver of the money? Bank is giving the money on behalf of you. So it is credit the giver. How much? 5 lakh, 5 lakh. This entry is on which date? 1st of October, 110. Generally, the charges what you pay for loading, unloading, installation happens on a different date. So that is also one of the reason to write these in the different date and different entry. So what is my next expenses? So we have additional expenses of 20,000 and 25,000. Put together 45,000. So these expenses are not revenue expenditure. These are capital expenditure. Capital expenditure means what? I need to capitalize them with the asset. So again, what I should debit? Machinery account debit. Machinery account debit. And this money of paid it again to bank. How much? 45,000. 45,000. Now here they've done the entry in extra manner, not required. Machinery to vendor they have done, which means what? They have passed the asset entry and they have created the liability and they have reversed the liability and made the payment. So you can combine these both entry. Now, for all the practical questions that we do in this chapter, you will always combine these both entries. You will not pass the separate entry. Am I loud and clear? But in real life, some organization may pass combined entry, some may pass individual entry. Why? Because they wanted to know they made this payment to whom. So they create a separate ledger for vendor. So tracing becomes easy. Tracing becomes easy. How, sir? Simple. When you're passing the entry machine to vendor, you open one account called as machinery account. No. In that, to vendor, how much will record? 5 lakh. If I pass a combined entry, to bank, 5 lakh will come. So I will not know this 5 lakh rupees is paid to whom, which party I paid. Somebody in future asked me, from where did you buy the machine? I will not remember. So therefore, what they said, we will route through one intermediate account called as vendor account. So in machinery account, to vendor 5 lakh means what? From this person only I purchased the machinery. Like that, we'll get a hint. So in practical cases, when you go for articleship in client office, you might find some client accounting this way, some client accounting this way. Both are right. But for the examination perspective, what entry will you pass? Direct entry only will pass. You will not pass the split entry. Combined entry is what you have to pass. Machine to bank, machine to bank. Any problem here?
No, sir.
Online people, any problem here?
No, sir.
No, sir.
Now, we agreed one formula to calculate rate of depreciation. What is it? Rate of depreciation. Amount of depreciation upon original cost into 100. Into 100. Why? Because always the percentage what we get, 9.09% or 10%, 11%, whatever we get, always we'll try to multiply that on original cost. Why original cost? Because that cost is readily accessible to me. I am able to get the data very fast compared to the net original cost. Therefore, we said or agreed that in straight line method, depreciation is always charged on the original cost every year. So first point, second point, logically explained, any problem. Now, when to use SLM? Use SLM when the asset gives equal and constant benefit every year over its useful life. Now understand the logic. Plant and machinery, generally what happens, initial years, the machinery will have high efficiency. Like I took an example of my Activa. Initial 5 years, 10 years, it was running very smoothly, very nice. Mileage was what? 50, 55, 60 it will touch. But as you use it, as you do wear and tear, the efficiency of the asset will reduce. Obviously, components, no? The more you use it, it'll get spoiled. So once the machinery starts getting spoiled, the efficiency of the machine will come down. So therefore, as a businessman, I want to depreciate machinery high value where in the initial years. I want to depreciate as much as possible in the initial years and lower depreciation in the later year. In case of machinery, what happens? I'll be using the asset rough and tough very much in the beginning. Efficiency also will be very high. Productivity will be very high. As the life of the machine reduces, as its efficiency reduces, the production capacity also reduces. So I will not be able to use the asset that much. So depreciation comparatively will be less only. So there are some asset who will work high at the starting stage, work with low efficiency at the lower stage. There are some asset like that. Now there are some asset who are not driven by efficiency. They'll give you same constant performance throughout. Constant example is building. I'm buying this building. I'm using this building. Will you say that no, sir, in first year, super efficiency, building gave you extra revenue? Can you say that? No. Whether it is first year or the 10th year, all throughout the 10 years, you've used the building constantly, evenly, productively, you've used it. So there are some assets like building, leasehold asset. You remember that example I gave for 2 crore? 2 crore worth of land I purchased. I depreciate this for 20 years. How much is depreciation per year? 10 lakh. Is there any point that no, in the first year of the leasehold property, efficiency was very high, later it was very less? Like that, did you have any issue? No. No, not at all. Therefore, there are some assets like furniture. If you see, furniture means which furniture? The furniture which I'm using in office, my office table. That table, whether it is first year or 10 year, will be pakka same like that only. It will not change. So I'm talking about certain assets whose efficiency does not increase or decrease upon usage. It will be constant throughout. On that asset, you will prefer to use straight line method. Use SLM when the asset gives equal and constant benefit throughout. Whenever you feel that the benefit that is coming is not constant, it is fluctuating, then you'll use WDV method. WDV method. Use WDV when the asset gives higher benefit in the initial years. In case of plant and machinery, motor vehicle, computers, laptop. This laptop which I'm talking about, the efficiency was too good when I purchased in 2021. Now if you see, I have a lot of problem here. The laptop is eventually become slow. And many times it gets stuck also. You are the proof for that. You've seen that? Now, this is because of too much of usage. So there are certain type of assets which will give you very nice efficiency, nice productivity, nice output in the initial years. And you would want to capitalize that in the initial years. Means what? You want to depreciate a lot in the initial years. Because later stage, when the output becomes low, when the efficiency comes down, you can't claim the same amount of depreciation. Therefore, for that asset, what will you use? WDV method. So use WDV when the asset gives higher benefit in the initial years and has declining benefit over the later years. Am I loud and clear? I'm now only talking about SLM. I'm not coming to WDV. Now, this point, why I had to compare with WDV? Because without comparison, you'll not be able to get a logic to it. So therefore, for comparison purpose, I gave you a idea that what is SLM and what is WDV. Any problem? No. A building used as office space provides equal utility every year. Therefore, what do we prefer there? Straight line method is preferred. Any problem here? No, sir. Now coming to WDV method. Is straight line method or WDV method got to do anything with accounting? Will my accounting change? Will my journal entry change? Will my ledger balance change? Or my ledger presentation will change depending on straight line method, WDV method? No. Because SLM method or WDV method is purely a mathematical way of calculating the amount of depreciation. Once you get the depreciation, accounting remains same. So what is written down value method? In the written down value method, the depreciation is charged on the book value every year. Book value every year. What is book value? Original cost and minus depreciation of each year, you get the book value. For instance, in year 1, the value of the asset is how much? Let's say 10 lakh rupees. And the rate of depreciation is 10%. Rate of depreciation 10%. Let me do using SLM method and WDV method. I'll give you a comparison. Year 1, cost of the asset is 10 lakh. Depreciation how much percentage? 10%. SLM method means what? 10% always calculate on the original cost. Whereas here 10% is on book value or written down value. Book value is also called as written down value. Now please tell me, what is the depreciation of year 1? How do you calculate? So 10 lakh is original cost into 10%, which is 1 lakh. So what is my remaining book value? Or we also call this as written down value. WDV doesn't mean WDV method. WDV means what? Written down value. The value which is written down from 10 lakh to 9 lakh. Written down value. The value which is written down. That is called as book value or WDV or reducing value or reducing balance. Whatever you say. Please tell me, what is the depreciation of year 1 in case of WDV method? Same. 10 lakh into 10% is equal to 1 lakh. Sir, cheating, sir. You said 10% on the WDV, but you are calculating the original cost. Donkey fellow, in year 1, I will not have the book value, no. In year 1, what is my book value? The original cost itself is book value. In year 1, my original cost is equal to book value. So in year 1, whether you're using SLM method or WDV method, the amount of depreciation is going to be same. So now what is the written down value here? 9 lakh rupees. Now the difference will start feeling from the second year onwards. Now, if I do depreciation for second year, please tell me, what is the depreciation for year 2 under SLM? Sir, you have to calculate 10% on original cost. What is the original cost? 10 lakh is the original cost. So 10 lakh into 10%, same 1 lakh. Now in WDV method, you are calculating 10% on the written down value. What is my written down value? 9 lakh. On 9 lakh, I'll calculate 10%, which is 90,000. So what is my remaining book value? 8 lakh 10,000 here and 8 lakh here. We call this as book value or reducing value or WDV value, whatever you say. Third year, what happens? Third year, depreciation of year 3. Again, we are doing SLM method. SLM method means what? Straight line method. Means always calculate the depreciation on the original cost. That's why alternative name of straight line method is what? It's called as fixed percentage on original cost method. Another name is what? Fixed percentage on original cost method. And since the amount of depreciation is same every year, 1 lakh, 1 lakh, 1 lakh, we also call that as fixed installment method. We call this fixed installment method because every year the amount of depreciation is fixed, same 1 lakh. Like how we have installments, fixed installments, EMIs. Like that, this is also fixed. That's why it is called as fixed installment method. Now, please tell me, 1 lakh depreciation gone means how much is the remaining book value? 7 lakh. Now, what is the depreciation here for year 3? You will calculate this on the written down value. So what is the written down value here? 8 lakh 10,000. You have to take the latest written down value. See, understand, this is also WDV. This is book value. This is also book value. Which book value will you take? The latest book value you have to take. Which is my latest book value here? 8 lakh 10,000. So 8 lakh 10,000 into 10%, which is 81,000. So what is written down value? 7 lakh 29,000. Any problem here? No, coming back. In written down value method, depreciation is charged on the book value. Book value means what? Book value is also called as written down value, also called as reduced value. On the reduced value, every year's latest reduced value, on that you multiply the percentage. Any problem, online people? Online people, any problem? So further, first of all,
No, sir.
Are you all there? Or gone? Mohit, Moshina, Neha, Niranjana, Sushmita, Vaidi, Niyasha, anybody? There or gone?
Yes, sir.
Gone.
Yes, sir.
Yes,
Okay. Very good. Now, in WDV method, the amount of depreciation is high in the initial years. High in the initial years. Now come back and see. Please tell me, what was the depreciation in year 1? 1 lakh in WDV method. Year 2, 90,000. Year 3, 81,000. So highest in the first year, little bit low in the second year, little bit even more low in the third year. Why? Because why high depreciation in the first year? Because we believe that first year the machine will have highest efficiency. As you use, the efficiency will fall. So depending on that, the value of the asset also, that is wear and tear, depreciation also needs to be reducing. That is the idea. In WDV method, the amount of depreciation is high in the initial years and the depreciation gradually reduces as year passes by. However, so as you pass, the amount of depreciation gradually goes down, decreases. However, the value of the asset will never become zero at the end of its useful life. By the time you come to the end of the useful life, the value of the asset under WDV method will never be zero. If you want, take the rest of the years as homework. Do for 12 years. Do for 15 years. Do for 20 years. Value will never become perfect zero. It'll go to 0 point something, but it'll never come to zero. But in SLM method, at the end of the useful life itself, the value of the asset will become zero. That is the beauty. In SLM method, the value of the asset at the end of the year becomes zero. But under WDV method, you keep on depreciating even for 100 years. The value will never become exact zero. It will become 0 point something. It will never be exactly zero. But in SLM method, exact zero, it becomes. Book value is nothing but original cost minus depreciation of each year. So how did I get the final book value? 8 lakh 10,000. From the original cost, 10 lakh, I subtracted depreciation of each next year. Then I got a remaining book value. On that book value only, I am calculating the latest depreciation. When to use WDV? Use WDV when the asset gives higher benefit in the initial years. That's why high depreciation in the initial years and has the declining benefit over the later years. Since the efficiency is falling in the later years, the amount of depreciation also gradually needs to reduce. So this is best suited for plant machinery, motor vehicles, and computers. Example, a machinery has high efficiency in early years and low efficiency in later years. So go for WDV. Why? Because in in the initial year, with higher efficiency, amount of depreciation, amount of your expense will be high. As you go down, it will become less. The expense will become less. So what is the comparison? Depreciation amount for SLM same every year. For WDV decreases every year. Based on, you calculate the percentage on original cost, and for WDV you calculate on the book value. How do you get the book value? Original cost minus the accumulated depreciation. Correct? No? Here you calculated this 10% on 810. How did you get 810? From 10 lakh I subtracted 1 lakh depreciation of first year, 90,000 depreciation of second year. How much? 1 lakh 90,000 I subtracted. Then I got 8 lakh 10,000. On that 10% is how much? 81,000. So 10 lakh is what? Original cost. 190 is what? Accumulated depreciation. It is depreciation of year 1 and 2 put together. So original cost minus accumulated depreciation is your book value on which you're supposed to calculate depreciation under WDV method. Suitable for asset with equal usage over a time. WDV is suitable for asset with fast value. That is, fastly it will come down. The value will come down fastly in the later period, which means efficiency high in the initial years, lower in the later years. Residual value considered. Here, not considered yearly. Why? Because the rate of depreciation, what they give, no. In this, already the scrap value is considered. Sir, how, sir?
After 14.
Here it is. This formula is there, no? Haunted formula. Here vegetable vendor cannot save. The only exception is this formula. R stands for rate of depreciation. How to calculate rate of depreciation using or under WDV method. If you look at this formula, the formula says 1 minus nth root of S by C into 100. 1 minus nth root of S by C into 100. S here stands for residual value or salvage value. Residual value is also called as salvage value. Salvage value also is called as scrap value. 3 names. So in this formula itself, the formula what you get, no, ROD percent 10%. In that already scrap value they are adjusting. So one more time, need not adjust. Same thing happened here also, no, boss. When we were doing SLM method, ROD percentage was given. I told you 11 lakh is the cost of the asset. 1 lakh is the scrap value. Okay. Did you do this way? 11 lakh minus 1 lakh on 10 lakh. Did you calculate the 9.09 percentage? No. You multiply 9.09 directly on 11 lakh. Why? Because how did you calculate 9.09 percentage? Amount of depreciation divided by original cost into 100. You got 9.09 percentage. You remember? How do I get the amount of depreciation? This amount of depreciation I got by minusing scrap value. So whenever you get ROD percentage, whether under SLM or WDV, in that the scrap value is already factored in. The scrap value is already considered. The scrap value is already adjusted. So whenever they give you ROD percentage, whether under SLM or whether under WDV, scrap value is separately given. Do not consider the scrap value when ROD percentage is given. Scrap value should be considered when ROD is not given. WDV 100% they'll give you percentage. They'll give you percentage. Only with SLM they'll play. Sometimes they'll give you percentage. Sometimes they'll not give you percentage. So I'm telling you, scrap value. When are you supposed to consider? When the percentage is not given. When the percentage is not given. Residual value, when will you consider? Consider when percentage not given. Should not consider when percentage given. So whether it is SLM percentage, WDV percentage. Percentage given, don't take scrap value into consideration. Percentage not given, take scrap value into consideration. Okay, not okay? Now, additional point, very, very important. Those who are thinking, okay, sir, once I complete inter, I'll go to articleship, there in client office, I will suggest the client, hey, you, building, SLM, plant and machinery, WDV. You have got one thought process, no? Keep all that thought process. Understand. If you go to companies, you have to follow one rule book called as Companies Act. Companies Act allows you to choose the different methods depending on the asset type and the usage pattern. If you want to use SLM method, use it. WDV method, use it. Production in method, use it. Machina rate method, use it. You have choices. But when you prepare accounts as per income tax has nothing doing. Too many options, for me headache. Someone will apply SLM, someone will apply WDV. I will not take all that headache. For me, collecting tax from you itself is a big task. On top of that, more options, more drama. I am not into for this game. So they said very clearly, we should apply only WDV method. So now, if you have a lot of paisa in your business, you do accounting twice. One as per company, one as per income tax. 2 times you have to prepare accounts with these 2 changes. 2 times accounts prepare means duddu nare salavangla. Those who feel that I can't spend so much money, what they will do? Nothing doing. Everything WDV. No headache. Sir, then in every company, they'll do only WDV. No. Some party are duddu party. They're like, no problem. We'll do SLM for accounts as per Companies Act, and for IT for you, WDV. So we have 2 accounts. That is when the concept of what comes into picture. This also we discussed in 12th. Deferred tax asset, deferred tax liability. When it did Schedule 3, TS Reval, Volume 3, first chapter, we had deferred tax liability net, deferred tax liability asset net. I mean, not as a liability, asset net. I told you that I'll explain in CA. Where in CA? Not in foundation. Intermediate. Because we have a separate accounting standard based on this. The concept of DTA and DTL comes into picture when items like this depreciation are recorded twice. Once as per one law, once as per tax law. So both leads to different profitability. This arises or gives birth to DTA and DTL. This will understand exactly where in CA intermediate. Am I clear? This is one extra point I'm putting in your mind, that those who are thinking that for this asset, this, that asset, that, again you have to look into the budget of your client. If client ka budget is permitting, he can spend a lot, then do whatever you want to do. If budget ka nahi, client ka budget is very tight, then only WDV method. Any problem?
No, sir.
Today also we couldn't do much of practical questions, but lot of concepts I explained, lot of points, very important points. That points which you'll never get to hear from anywhere, that points I disclosed. So first 2 class I made it slow. Why? Because I was giving opportunity this far for all those people who are yet to watch your 11th. This is a time you can capitalize. Once I start taking next class onwards, we'll go in that pace. Flight, how it takes off, that speed will go. So if you want to cope up with that speed, what are you supposed to do? All the questions of TS Rival book, you should be completing before the next class. If not, at least SLM and WDV finished off under normal method. I'm giving time till Sunday to complete the entire question from TSC book. Am I loud and clear? So now those who are thinking that sir is going very slow, so much in depth, only initially to make you comfortable. Once we come to next class onwards, the pace is going to be faster. So be very clear with all the accounting entries and ledger presentation. Am I loud and clear?
Yes, sir.
No energy. Am I loud and clear?
Yes, sir.
Online people, am I loud and clear?
Yes, sir. Yes, sir.
Wonderful. On that positive note, let's sum up today's session, people. That's all from my side for this session. And see you all in the next class. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you. Thank you. Thank you.
Thank you, sir.